These are 8 top stocks in pre-market with big percentage move today. While watching bullish pre-market price actions, let us inform you. Our review on IBG. Innovation Beverage Group Ltd is making waves in the market today, with shares exploding 206% pre-market following a major distribution deal with Republic National Distribution Company, RNDC. This agreement is a huge step forward, instantly expanding Innovation Beverage's reach into 6 key U.S. states: California, Oregon, Washington, Hawaii, Arizona, and Michigan. If you follow the liquor industry, you know RNDC is a powerhouse, one of the biggest distributors in the country, and this deal means IBG's brands are about to get a lot more shelf space in some massive markets. For a company that specializes in premium and super premium brands, including Australian Bitters Company, Bittertails, and Twisted Shaker bottle cocktails, this is a game changer. California alone is one of the largest liquor markets in the U.S., and cracking into it at scale can be a catalyst for long-term growth. More states, more bars, more retailers. It's all about getting the product in front of more customers. Investors clearly see the potential, and the stock is reacting in a huge way. But now the real challenge begins: execution. Expanding distribution is one thing, but converting that into sustained revenue growth is another. If Innovation Beverage can successfully capitalize on this new exposure and drive strong sales, today's monster rally might just be the start of a much bigger run. Our review on DGLY. DGLY Incorporated is absolutely ripping pre-market, up a staggering 181%. But the move comes with a bit of a plot twist. The stock is on fire, yet the company just announced an unexpected delay in filing its 10K, which typically isn't something investors cheer for. So what's going on here? Despite the delay, DGLY reassured the market that there won't be any major surprises in its 2024 financial results. That seems to be calming nerves, at least for now. The real question is whether this rally has legs, or if it's just short-term speculation before reality sets in. DGLY is a pretty unique company, with its hands in video technology, healthcare revenue cycle management, ticket brokering, and even private jet chartering. A bit of an unconventional mix. Investors might be betting that any uncertainty surrounding the delay will blow over quickly, leaving the stock room to run. But let's be real. Delayed filings almost always raise eyebrows. If the company sticks to its word and nothing material changes, this could turn out to be a non-issue. But if new details emerge that weren't expected, this rally could flip just as fast as it started. Definitely one to watch. Our review on CNTM. ConnectM Technology Solutions Incorporated is on fire pre-market, up 77%, after receiving a $1.60 per share buyout offer from its 3 largest institutional investors. The deal, valuing the company at $46.5 million, would take ConnectM private, pending due diligence and regulatory approvals. The investor group, Srisid LLC, Aramilli LLC, and Winlight Global Company Limited, has been steadily increasing its stake, signaling confidence in ConnectM's clean energy tech. With the stock trading at $1.20 pre-market, there's speculation on whether the deal gets finalized or if a higher bid emerges. For now, momentum is strong, and investors are watching closely to see how this buyout plays out. Our review on QNRX. Quoin Pharmaceuticals Ltd is turning heads this morning, up 63% pre-market, after unveiling more highly positive clinical data from its ongoing pediatric Netherton syndrome study. Their lead product, QRX 003, continues to deliver remarkable results, showing that after 6 weeks of daily whole-body application, the patient's skin remains almost completely healed, a major milestone for this rare and often debilitating disease. What's even more impressive is that the patient no longer requires medications that were previously essential, like antibiotics, antivirals, antihistamines, and steroids. The most striking improvement? the near elimination of severe itching, which has allowed the patient to experience full nights of uninterrupted sleep for the first time in their life, all without the need for sedating medication. With 0 adverse events reported, these findings reinforce the potential of QRX 003 as a breakthrough treatment. Investors are clearly reacting to the strong data, and the stock is surging as a result. The big question now is, how soon can Quoin push this toward regulatory approval? If these results hold up in broader trials, this could be a major step forward for both Netherton syndrome and other rare skin diseases. Our review on SBFM. Sunshine Biopharma Inc. is making waves this morning, up 57% pre-market, after announcing promising study results for its K1.1 mRNA-LNP product, a potential new treatment for liver cancer. The company has been running tests on human tumor models in mice, and the results suggest that their mRNA lipid nanoparticle approach is not only effective at delivering the therapy directly to tumors, but also shows clear tumor growth reduction under repeated dosing. They've been fine-tuning both the full-length and truncated versions of K1.1 mRNA, and early signs indicate that the truncated version might offer stronger anti-tumor activity at lower doses, a big deal when it comes to optimizing treatment for real-world applications. With good tolerability reported in animal models, the company is now working on fine-tuning dosing levels before moving toward further development stages. Investors are clearly excited, and for good reason. mRNA-based treatments have been a hot area of research, and if Sunshine can translate these findings into human trials with similar success, they could be sitting on a major breakthrough in hepatocellular carcinoma treatment. One to watch closely as the data keeps rolling in. Our review on SPWH. Sportsman's Warehouse Holdings Incorporated is making waves today, up 44% pre-market after Craig Hallam upgraded the stock to a buy and highlighted some promising signs for the retailer. The firm set a $3 price target, noting that despite some lingering macroeconomic pressures, the company is starting to show green shoots with positive comparable sales in core categories like fishing and camping in Q4. This is a big shift after a long stretch of negative same-store sales since 2020. Management is also projecting a turnaround in 2025 with expectations of positive same-store sales for the first time in years, which is a key sign of recovery. While the broader consumer environment remains a bit challenging, Craig Hallam believes that shares have likely bottomed and there's substantial upside potential from here, especially as earnings start to normalize and stabilize. If Sportsman's Warehouse can maintain this momentum and continue to see improvement in these core categories, it could be well-positioned to benefit from the ongoing rebound in outdoor and sporting goods spending. For investors, it looks like an interesting opportunity to ride the wave of recovery, especially with the company looking to regain its footing after a tough period. Definitely one to keep an eye on as things progress into 2025. Our review on TTEC. TTEC Holdings Incorporated, a global leader in customer experience, CX technology and services, is seeing some serious movement in its stock today, up 26% pre-market after Craig Hallam initiated a buy rating. The company has been making strides in the rapidly growing CX space, with its two segments, TTEC Digital and TTEC Engage, offering a blend of AI-driven solutions and large-scale managed services. Their services span cloud-based platforms, customer relationship management, analytics, and end-to-end customer interactions, delivering a comprehensive digital experience for enterprise clients. Craig Hallam's positive outlook is pushing the stock higher, and with a price target of $3.50, there's room for growth from its current price of $3.27. Despite tech's one-year high of $9.56, the stock is sitting on the lower end of that range at the moment, making this a potentially attractive entry point for those betting on its recovery. Analysts seem bullish, with a moderate by consensus and strong upside potential if the company can capitalize on the continued demand for digital and AI-enhanced CX solutions. So, it looks like TTEC might be on the upswing. Definitely one to keep an eye on. Our review on HEPA. Hepion Pharmaceuticals Incorporated, a clinical-stage biopharmaceutical company focused on AI-driven drug development for liver diseases, has seen a solid 20% increase pre-market after announcing a delay in its annual report filing. While delays in filings are usually a bit of a red flag for investors, the news around Hepion's Form 10-K delay is a bit more nuanced. It turns out the delay is due to data compilation issues, not anything to do with the company's core operations or health. What's actually got investors excited is the significant financial news tied to this filing delay. The company is reporting a $23.5 million decrease in R&D expenses, thanks to lower clinical trial costs and reduced headcount. This could be seen as a positive, showing that Hepion is managing its costs effectively. Also, they've trimmed general and administrative expenses by $2.4 million, which signals a more efficient operation overall. Investors seem to be reacting favorably, likely due to the cost-cutting measures and the anticipation of the company's AI-driven liver drug, Rincofostat, continuing to show promise. With the filing expected within a 15-day extension period, it looks like Hepion is still on track, and today's price action is a sign that the market may see this delay as more of a temporary bump in the road than a serious concern. Definitely one to watch as this story unfolds. Please subscribe, give the video a like, and watch more from our playlist. Thanks.